Salutations everyone and welcome to our new video Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at dollar index, euro, Aussie, silver, crude oil and dollar NOK. Now today it's a very important day. We have the FOMC rate decision, which should be very interesting. Now expectations are that they will be on hold, but keep in mind that there were plenty of central banks that raised more than expected. So actually, Bank of Australia, Bank of New Zealand, even Bank of Canada has raised even when we expected that they will be on hold. So I'm wondering if maybe Fed is a little bit in a hurry here and want to lift rates sooner rather than later, which also is one of the reasons why stocks are trading to the upside. Because obviously speculators think that we are closer to this to the end of the cycle, of this hiking cycle. Also, inflation data reported yesterday came down from 4.7 from the previous report to 4%. Okay, while the forecast was 4.1, if I'm not mistaken. So inflation is coming nicely to the downside. We are seeing stocks moving higher. Gold metals are coming down because speculators obviously are not looking to hedge this, are not looking to buy commodities because inflation is coming lower. However, US dollar is not really that bearish. Is not really that bearish compared to the very strong stock market. So I still see it here testing very interesting, very strong support level for potential wave 4 euro between 50 and 38.2%. Also small former wave 4 here at around 103 level as well. So it seems like that this is still potentially ongoing temporary corrective setback within higher degree flat correction, meaning that wave C still could reach 105, 106 possibly before this whole corrective recovery that I think it's underway since February can come to an end. And obviously we are closer to this resistance. We are seeing prices moving into these final stages of these corrections. Maybe final piece of this puzzle is still missing, but I think that later this year, in the second half of 2023, we could experience a reversal down on US dollar, and that's when other major currencies like euro, Aussie, and even cryptocurrencies could potentially finally see a new recovery. If we look at the euro so far, obviously with what I've been saying there on the dollar index, it's the opposite for the euro dollar. What I see is ongoing correction here for a wave 4. We already see some overlapping activity here. So perfect resistance, definitely it's here around 108 to 1030. Again, former wave 4. So I think that there is a chance for a final fifth wave down to retest this 2023 lows, as long the market is trading below 109.40. But even if we see 109 level and daily close above that level, then I think that this current bearish impulse will be invalidated. Then even some kind of a triangle could be the case, or even possibly this flat correction is already finished. But for now, what I see is still euro is very weak compared to very strong commodity currencies. I mean, for example, if you look here on Aussie, it's a very strong, much stronger than euro. But still, even strong Aussie is now moving into potential resistance. As I said earlier, metals are coming to the downside. So maybe Aussie is going to face some resistance here around 68.17. It's the former swing highs. So watch out for potential pullbacks here before this market can resume higher. So if strong commodity currencies like Aussie will fail at this resistance, then I think that euro could potentially see much more weakness because it's already very weak. But I'm bullish on Aussie, no doubt. I think that there will be more upside coming, but I just think that this current extension higher could see some kind of a retracement. Now looking at the daily chart, I think that much more upside here is in the cards. Now this black trend line is already being broken. So as I said, we are bullish here, but I think that this wave B could provide some resistance in the near term. Okay. Now let's take a look on silver. Silver, I think it made a very deep complex correction here back into 2022 September lows. And from there, we can see some higher highs, higher swing lows, but not really impulsive recovery. However, there is a chance for this recovery to be finished in 5 waves if we consider potential wedge shape where overlaps between waves 2 and wave 4 are allowed. So there can be more upside coming, but keep in mind that wave 4 here can be still looking for deeper prices. Why? Because if, as you know, each fourth wave should be made by minimum 3 waves, and since the first drop here was a very strong one, looks like a 5 wave movement followed by this overlapping recovery that looks like a correction. So I think that that's still only one part of this incomplete higher degree wave 4, and we could potentially see more weakness towards the 61.8%. That comes in around 22.40, and above that, obviously you have this previous swing low here. So I think that this zone is the first support around 22.50, 40, around there. Much deeper, more important levels could be here around 21.50. Okay, where you have also wave C that equals to wave 1. Wave A. Now let's take a look on crude oil. Now crude oil, it's a bit chopping, it's a bit choppy here, but still it holds this support very well. From, if you look back, swing lows here around $62-63 per barrel. So I still think that there is a chance for a recovery. We are not breaking this trendline resistance yet, but possibly it will come, especially if stocks will resume higher. Also, looking at the 4-hour chart, I was having some hard times labeling these latest swings because, as you can see, we were moving in both directions recently, and we always have seen several failure breakouts to the upside and to the downside. But earlier today, I came out with this idea, which can be actually an expanding triangle in wave B. And so far, what I like is that this low here, despite being broken at 67, bears didn't stay in the game for any long time. In fact, we have seen a very nice reversal so far, and looks like that this can be a very small impulse. So today we have also the US PPI data, we have also the Fed, as I said, and if we can stay bullish here on crude oil by the end of the day, and even potentially breaking this trend line, then I think that more upside still can be in the cards here on crude oil, potentially even back towards these June levels. Okay, now if crude would really come to the upside, watch out for NOK. Why? Because NOK is doing very well. It's coming very nicely to the downside so far, and looks like that we can accomplish, might have already finished this 5-wave recovery. This is clearly a very strong reaction lower from a new high. Looks like an impulse, if you ask me. So it can be ongoing bearish impulse. And what I like about the crude oil is, higher crude oil equals to strong NOK. Of course, it's not always the case, but what I like so far is that NOK, which is here in blue, came to the downside. It's still trading bearish. At the same time, even crude oil came to the downside. But if crude oil is trying to stabilize now, then I think that, and potentially will move much higher, then I think that dollar NOK will see much more weakness. Okay, can even accelerate to the downside because NOK was doing well despite lower crude oil. So if crude oil will bounce, will attract some buyers, then those buyers will be looking to sell the US dollar and most likely will be looking to buy this NOK, okay, because of the correlations, strong correlation between NOK and crude oil. So looking at the wave structure here on NOK, I can see some very nice, beautiful bearish price action. Potentially, we are still in a wave 3 of this first bearish impulse cycle. Some tips are here now at 261.8, 161.8%. So watch out for potential rallies, but I think that rallies could be potential opportunities to join this weakness, while the crude oil is trading above this $67 per barrel. Okay, traders, thank you very much for your attention. Thank you very much for watching this video. Talk to you soon. Bye.